one way we can invest is through interest rates, as they are very safe and they are also government protected. So we have 50,000 Canadian dollars, and in 2006, being converted into pounds becomes £6,600. As we can see by our graph here, initially we start at 6,600, and if you do this through variable interest rates, before the financial crisis, interest rates were around 5.5%. So you can see quite a steep increase in the value of the money. But then after the financial crisis, interest rates decreased all the way to 0.5% for almost a decade. So that's why it becomes a very flat line up until the 2020 pandemic, where COVID happened. And at this point, it decreased even lower to around 0.1% until 2022, where the interest rates rise again to around 4% all the way to where we are currently. And that totals out to be around £8,700. However, we can also look at fixed interest rates, where from my calculations here, if you have a 1% base rate, the value becomes £8,063, and a 2% base rate almost £10,000, and a 3% base rate around £12,000. However, we can also factor in inflation, which has averaged 2 to 3% in the UK from 2006 to 2025. So that's caused not a major difference in the real terms. However, purchasing power has probably slightly decreased due to having an inflation rate of 2 to 3% in the UK.
If we had invested 15,000 Canadian dollars in 2006, dividing 60% into Nvidia and 40% into Microsoft, the total value of this portfolio by 2025 would have to grown to approximately 3 million Canadian dollars. In 2006, one share of Nvidia was priced at around $3. By 2025, its share price reached about $1,000. Therefore, the total growth rate of Nvidia stock is calculated as 1,000 divided by 3, approximately to 333.3. This means Nvidia's price increased more than 330 times over the 18 years period. For Microsoft, the stock price in 2006 was around $27, and in 2025 it reached approximately $420. Thus, the growth rate of Microsoft is 420 divided by 27, approximately to 15.5. This shows Microsoft's stock value growth by about 15 times during the same period. Since 60% of money was invested in Nvidia and 40% in Microsoft, the weighted average growth rate of the whole portfolio can be estimated by 0.6 times 333.3 plus 0.4 times 15.5 equal to 200.3. Hence, the overall portfolio value would increase by approximately 200 times. So finally, we can calculate the total return in Canadian dollars. So the final value is 15,000 times 200.3 equal to 3,004,500 Canadian dollars. So by 2025, my initial investment of 15,000 Canadian dollars would have become about 3 million Canadian dollars.
We start with the real gold price in Canadian dollars in January 2006. Gold was $601.704 Canadian dollars per ounce. In January 2025, it increased to 3,773.887 Canadian dollars per ounce. This means gold grew by about 6.27 times over 19 years. If the 15,000 Canadian dollars price was for invested in gold in 2006, we can multiply the money by the same growth. So the final value would be around 94,018 Canadian dollars in 2025. Gold is known as a safe and settled asset. It grows slowly, but it protects value well, especially during crises like the 2008 financial crash and the 2020 pandemic. In simple terms, gold is a low risk and steady investment. It may not grow as fast as stocks, but it grows strong protection over a long period.
Well, what is the best way of the investment? So based on the returns, obviously the stock can provide the highest return. In contrast, the saving account and the gold can offer the lower return, but they are more stable and less risky. So our choice is invest in stock.